Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief/Strategy Tuesday. We've got a lot of time to talk strategy this week. There's not a huge number of economic events out there to really hang our hats on. The big mover and shaker today has been U.S. oil. WTI crude oil has been all over the map. We're going to start with WTI crude, but I want to start by introducing a Bollinger W trade that's live right now, and then I'm going to go through how to trade the Bollinger W, give you a little bit of a look and some insights into this strategy that I think is fairly robust. This is a good look at one that I'm working right now. Remember, these are demo funds. Don't get carried away on that. Bobby Bob, good to see you. Bren98, always a pleasure. You do have the idea here that we're going to maybe potentially pick a bottom here with the Bollinger W. We're already long. Jay Ski, always a pleasure, Jay. Welcome from YouTube. You do see a nice bullish break here. This is a clear-cut W. It really is. 30-minute chart. First lows outside of the lower Bollinger Band. Pullback. Second lows inside of that lower Bollinger Band. And then you've got the big green candle. Buy at one point, we were up about $1,000 on this trade. Trading 4 lots, WTI crude futures. And then we've given back about half of that. I don't expect this thing to be figured out just yet. Is it a high-risk trade? Yeah, well, we're going against a pretty stiff trend. But remember, that's what the Bollinger W is all about. It's all about picking bottoms. Good to see you, Mayday. Good to see you. Welcome to the room. My bottom line is this. We're talking strategy today, and I do want to start off with a little bit of conventional Fibonacci strategy here from me. U.S. oil was all over the map during the U.S. overnight. Why? Because we had some reassurances from Israel. Mark Corp, always a pleasure. Reassurances from Israel that they're not going to hit the oil fields. What does that mean? Israel assures the U.S. it plans to target Iran's military, not oil or nuclear, source says. So what would this be? This would be a bearish market driver for WTI crude. And as you can see, been an incredibly negative week, about 6.5%. There's a couple of things that we need to really talk about when it comes to driving WTI crude oil. Number one is going to be the Israel-Iran situation. That's number one. Reassurances from Netanyahu that the Iranian oil structure is not going to be hit is absolutely imperative. I mean, that's huge. That's a big bearish market driver for crude. Also, remember, going into fall-winter seasonality for WTI crude, that's a big bearish market driver as well. So you've got to really say, okay, that's 2 bearish market drivers. What's the third one? U.S. election. The polls have really broken in favor of Donald Trump in the last 3 days. Some are saying it was the worst weekend of all time for a campaign. Kamala Harris's campaign really got a lot of bad press, and you're starting to see a lot of desperation out there now. And I will call it desperation. Harris hasn't done any interviews, anything really of that nature. And now there's talk she's going to be on Joe Rogan's show. Trump's going to be on Rogan's show. There's a lot going on right now. And believe it or not, I know that some of you listen to Joe Rogan, some of you don't. It's the biggest podcast in the world. The guy has a tremendous following. And right now, you're seeing the game really break. This is Polymarket. There's over $1 billion, almost $2 billion bet on this market. And right now, Trump's about 58%. This is the lowest Harris has been since she entered the race for Biden. So there's a lot going on right here. That's a bearish market driver for WTI crude if I've ever seen one. That's a trifecta. Polls heading towards Trump's favor. Why would that be huge? Because we're saying more production is going to come online. That's sending crude oil down big. You've also got the Israel-Iran situation. Israel pledges, scouts on, or we're not going to bomb the oil fields. I would say that's probably another major bearish market driver here. And then lastly, fall seasonality. Fall seasonality is huge. So when we're looking at something like this, WTI crude, we'll hit the technicals here in just a second. But we've got a lot of reason to believe that maybe we're headed lower in the short term. So let me see right here, Jay Ski. Think it will hit 71.25. I've got a profit target up there on the Bollinger W that's right in that neighborhood. I think we could definitely rotate up from here. I just don't know that we will with those market drivers. And let me see. Now, for now, they won't laugh out. It depends on what Israel hits and what Iran hits. Yeah, it's definitely a tit for tat situation, the Iran-Israel situation. But right now, we have verbal promises that the oil fields will not be hit, and that's a bearish market driver. A lot of that angst was priced into WTI crude, which by far is the biggest mover and shaker during this last U.S. overnight and really to begin the week. Ivy, good to see you, Ivy. All right, so if we're trading this right now, there's a couple of really huge technical levels that I would be keying on. Number one, 62% of this monthly. I talked a lot about that 71 area. I think we at least go back and check that out in the U.S. session, but that area was taken out. There was only about a 20 tick bounce, a 20 pip bounce from 71 even, and it didn't last very long. And then right there, we've got another level down there, 68.95, 78%. Beautiful long location if we get a chance to bid it. Low right there was 69.73, and since then we're up about 75 cents. So if I'm looking at my intraday price action, my 30-minute signature, now remember, that's really the big one for me. The 30-minute signature is the big one for me. Right there's your big break. Okay, came yesterday afternoon, actually. That's when that news began to hit news wires. And then bang, we've been bearish ever since. Nice rally, sort of in that U.S. pre-market, and then we're just sort of milling around. I think there's a decent chance that the bottom's in, and that sort of plays into how we developed our Bollinger W trade. So if I'm trading this intraday, I don't really see any technical edge aside from our W strategy that I'm going to outline. For me, the first thing I would say, okay, I've got an influx of bearish market drivers. We had that Columbus Day holiday yesterday. We saw limited liquidity, but definitely a big sell-off. Right here, you've got an opportunity to step up and sell on the daily, and usually these daily Fibonaccis are pretty darn accurate, And this is just a look at my Fibonacci strategy I use, called the counterpunch. We'll outline that on a different live stream. We do have videos in the Elite Trading Series, though, that you can go definitely check out or take a look at. 38% right there, 72.19. I would be looking to sell 72s and really go with this 3-day trend, which has been significant. I mean, let's be honest. Last Thursday, we're coming in at 76, and I'm saying, there's a real chance we're going to go to 80. And then we sold off in a big way down to 69.70, and the pullback's on. So I think we're going to get a chance right there to sell 72. Let me see, Bren, what if you're trading at swing, Shane? Doesn't it look good right now to the upside? If I was trading at swing, Bren, it comes back to this Bollinger W strategy, basically buying in and locking in beneath today's low and looking to send them long. We're either going to bottom out here or we're going to go deeper. If I was going to take a position long or a swing long, is my trade location good enough? I would wait for a washout. I would either wait for a washout down to maybe 68.80, somewhere in there, or our monthly numbers, which were just a little bit lower, somewhere in there, maybe 68, somewhere in there. I'd probably wait for 68. But if you wanted to be more aggressive and trade the last 2 weeks range, you could go from like 68.90 or 69. But if I was going to put on a swing trade, it would be from down here, or I would wait for maybe a daily close up above 71 and then take that shot. If in fact you were going to swing trade this thing right now, you can see that we're struggling with our W. The heat's definitely back on us. So this probably would turn out to be a swing trade, especially if you were looking to maybe fill in some of this gap. And believe me, this right here, this chain, this 30-minute trend right here, this 30-minute chain, that's a major sell-off. That's on high volume during an overnight, during a period where there's not consistent volume. That's what we call a weak chain or a hole in the market. It's not necessarily a gap because those price points have been debated. But when that news item hit the market, you saw the big sell-off and there were no buyers. I expect there to be buyers in there, 72.50. I would be very surprised if we didn't rotate back up to 72.50. When would I do that, though? If we do wash out this low, we're probably going to go down and check out 69 even, maybe even 68. I would be taking a swing trade from low, or I wouldn't go right now unless you're going to execute this W. And if that's the case, it's going to be a higher risk trade. Definitely going to be a higher risk trade. So something to think about there. Let me see. Green face smiling. Dre Day every day. Good to see you. Please check the XBR USD 1 hour. Yeah, we'll get to it, matey. We got some strategy session stuff that we need to cover, though. And let's go and sort of get on with it. I hope that helps, Bren. All right, guys, let's go ahead and get on with our strategy stuff. We're going to cover the Bollinger W and also some 9 EMA stuff today to begin, really start off and see exactly what happens. But, if you need a place to trade, switch markets, 100% credit bonus. Go ahead and get in there and check it out. Up to 5,000, not necessarily the worst deal you'll find. Euro NZD, and this is a trade idea that we put out yesterday. I wanted to give you a quick update. I think you can ring the bell on this one, sort of a winner chicken dinner. We came down. We had an entry point of about 178. I believe it was 178.77, and we were looking for just a little bit up over 179.07. And you can see on our 30-minute chart, it went pretty good for us. Went pretty good for us. Went down about a couple hours ago. We got elected right there, just what I call a firm hit. 178.75, 77 was our entry. We nailed that one, and then we got that nice rotation to the top side up to about 179.21. So that was a winner. Not too bad. Treehawk, good to see you, Tree. Nice move right here. What I would definitely say is that this is why we shade our entry points. Our Fibonacci level there was set 178.70. We went down and checked it out, and then we rotated back up to the top side. So those bidders actually stepped in before our real number. That's one reason why I shade, and I make sure that I try to get in early because I want to make sure that I get in on the action. And a lot of times, if you put it right on your key level, you're late to the party. This next time down, probably going to be more problematic for that Fibonacci level, that horizontal support zone. So definitely what we like. I like winning trades. Anytime we can get a winning trade idea out, that's a good thing. Let me see. Double bottom there in the XBR USD. Yeah, we'll check it out here in a second. All right, we got one more question, then we're going to get on with our strategies. Let me see. Alfredo, good to see Alfredo. Hi, Shane. I have a question. Gold has been an upward trend for a long time. Is there any other asset in a trend as clear as gold, whether bullish or bearish? No. Silver is pretty bullish. Gold's bullish. I mean, gold. We'll look at gold towards the. Actually, we're going to trade gold here in a minute. Gold futures. But you start talking about a trending market. Gold. It's strong. Every pullback's been bought. I think the only thing that I would say that's been as strong for a longer time period is U.S. equities. Every time there's a pullback, there's bidders there in U.S. equities. So I would probably say something like the NASDAQ. The pullbacks are deeper, though. Gold's pullbacks, we've been buying 38% ever since I can remember, and it's always worked. So interesting stuff. I'm fascinated to see where gold goes. But that's a great observation, Alfredo. Yeah, it's been in an uptrend this last 2 years pretty much. I think we're going to 3,000 there. Be surprised if we don't. Okay, here's sort of the first strategy we're going to start with is the 9 EMA. I'm going to show you two ways on this, and we're going to try to build a couple of trades live here for you. Learn the 9 EMA intraday strategy in under 10 minutes. This was one of our bigger videos, 38,000 views. A lot of you probably are watching the channel because you saw that video. So we want to go ahead and check out exactly what a 9 EMA strategy is. Now, we're going to start with a basic 9 EMA. Now, this is YM. This is YM Futures. This is the E-mini Dow. Now, what we have happening here is I've added some RSI for confirmation. This is something that we got a lot of requests to do, and so we did it. Now, up here, we sort of had the market in overbought territory, something like that. We would be looking to sell that market. We're on a 1-minute chart here. This is an E-mini Dow 1-minute chart, and this is great timing because right now we're in oversold territory. That means that we're looking for a buy. Now, we're not using a crossover. We're not using anything fancy. We're looking to get a buy right up over this 9 EMA. And the way we do that is we wait for a candle to close, just a 1-minute candle. This is a 1-minute chart. This is high risk. Nobody's saying it's not high risk, but we are using a confirmation tool, which is our RSI. So think about what we're doing here. We've got an RSI, relative strength index, all the default settings. It's nothing fancy. Period of 14. Very simple. We're beneath 30 on that RSI. That suggests that we're oversold. We're looking for a buy signal right now. Now, the easiest way to trade the 9 EMA is just to put it on your chart. And when you get a bullish candle above the 9 EMA, you buy it. When you get a bearish candle beneath it, you sell it. Now, the idea here is to try to get in on a trend. Try to get in on a big move. So right now, you can see what we have going here. We've got an RSI. We were in oversold territory. We're looking to buy. So right now, what I'm looking for right up here is a close, a 1-minute bar close up above that 9 EMA, and then we're going to fire our guns and shoot. We're going to buy the market. That's what I'm looking for right now. RSI is my filter. Trading a highly volatile asset right now. Looking for a 9 EMA to get me into the market. So as soon as we close above that, we'll buy it. If we all get all the way up into overbought territory, all right, then we'll look to maybe sell it. So something going right here. I can tell you right now my stop loss is going to be beneath that swing low. If we can get a bullish close from here above this and we get in, stop loss is going to be beneath the previous swing low. Profit target, I'm going to dial in at a 1-to-1. I'm not going to look for a huge runner, although you can. This is a trend following approach. This is what this is. And so we're going to be watching relatively closely. See, we got another question there. What do you think about the Great Britain pound Kiwi for an intraday trade or a swing trade? Yeah, we'll pull that one here towards the end of the stream. So what we'll do, Right at the end, we'll do a little Q&A and go over your key markets, and I'll tell you what I think about them. XBR, USD on the 1 hour we'll look at. We'll also look at the Great Britain pound Kiwi for an intraday or swing trade, and then we'll also pull up gold Alfredo. But I did want to get in and try to execute one of these trades according to this basic 9 EMA strategy. Whether or not we need a good bullish close right there. That's our filter, guys. Remember, we don't want to jump the gun and say, well, we just went over the 9 EMA, so we buy right here. We want to close above that. That's confirmation. That's our entry point. Now, this is a very simple way to trade the 9 EMA. As you can see right there, I thought we had a pretty good chance of getting that close, and we didn't get it. So what is that theoretically doing? It's keeping us out of a losing trade. Even though it is a bit frustrating, I want to trade just like you guys want to trade. So let's get in. Come on, let's get a good bullish close right here. We've got 49 more seconds on the clock, 48, and then we're going to send them long. Stop loss, if in fact we get our close, is going to be beneath this swing low. Profit target. I'm going to set it right up here. We're going to go somewhere maybe at a 1-to-1, maybe a 1-to-2. Let's put a 1-to-2 on and let it run and see what happens. I'm going to put my stop loss a few ticks. Yeah, okay, here we go. A few ticks beneath our swing low. So let's just say 43,153, and we'll see exactly where our entry point is. But we may have a chance here to shoot for maybe 80 pips or 80 ticks. But we've got to get our bullish close first. And right now it doesn't look like we're going to get it again. Remember, that's not necessarily a bad thing. It's frustrating because we're waiting for our setup. But that's what keeps us out of bad trades. Confirmation. That's called confirmation. 3, 2, 1. So we got to wait at least another minute to get us in here. And I'm going to go ahead and probably cursor over and start talking about something else here in a second. But we're going to let one more minute. We're going to go one more minute and see if we do get our bullish close. If not, we're going to bail on it. We'll just come back to the setup. Here, we're going to sort of talk a little bit about a crossover strategy that's very simple. This one's already gone. This is a 5-minute chart, and you can see where our sell is right there with respect to our RSI. I'm going to briefly touch on that in just a second because we should already be short, but the trade really is moving very, very well, specifically with regards to that bearish sell-off in that gold market. So right now, gold's still up 0.5%, but we're definitely starting to look to give back some of those gains. And you can see it. We're just not going to get our trade, it doesn't look like. And that's okay, guys. That's what trading's all about. They pay us to wait. They don't pay us to trade. If they paid us to trade and pull the trigger all the time, we'd be over trading and taking way too many. We need to wait and be patient, even on a 1-minute chart. Be diligent, but be patient. So right here, doesn't look like we're going to get our entry anytime yet. We're going to have to move on and go do something else. All right, here we go. Gold futures. The 5-minute chart, I really like a 5-minute chart on a gold futures intraday during the U.S. session. A 1-minute chart isn't necessarily going to get the job done for us because there isn't necessarily that much volatility. Believe it or not, gold is an incredibly active market. It really is, but you've got to have volume. And typically we start seeing our volume dry up about this time of day. So I don't necessarily believe that I would go with a 1-minute chart. I think it's a big mistake, especially as choppy as gold can be. But check out this trade setup. Now, this is a good example of a 920, okay, a 920 EMA crossover. Relatively simple. When the 9 crosses the 20, that's our signal to get in. We cross under the 20, we sell. We cross over the 20, we buy. And the idea here is that we want to get in on big trending markets. That's the idea. Right there, we've got overbought territory in the RSI. That's our filter. We just used it to trade the 9 EMA. We're going to use it to trade this crossover as well. As soon as we get that overbought action, as soon as the RSI tells us that we're overbought, this asset is overpriced, the pressure is beginning to wane, or it should wane, the buying pressure, and we should get a retracement right there. Now, does that mean to sell it right there? No, we're using our crossover strategy as an entry point. So what do you have there? 9 EMA crosses over. So what would we be? We would be short right there. So we would already be short this market. A couple ways to execute. I'm awfully big on previous swing high, previous swing low being my stop loss. A lot of traders will wait and just take it. And once this crosses over again, then they'll exit the market. They'll also get out of the market if they get a bullish close above your moving average. For me, I would be short right here. And what would my profit target be? At least a 1-to-1, probably a 1-to-2. You could even use market structure. Shoot for maybe that order block right down in there that we got during that early U.S. session. You could certainly do that. But right there, overbought territory, RSI is above 70. Crossover, 9 EMA crosses over the 20, and you short the market. Could you wait for a pullback? Instead of going short right there, could you wait for a pullback and a touch and then a sell? Sure could. We'll talk about that some other time, though. We got some other strategies to cover. Can we get an entry? It's going to be tough. It's going to be tough on this 1 minute. We'll circle back around and see how that goes. Let me see, Jay Ski. I noticed that you use this strategy on very short time frames, usually for futures. What time frames would you recommend to use for Forex pairs on the 9 EMA strategy? What I would do on a Forex pair 9 EMA, 4-hour chart. You could look at a 30-minute chart during the U.S. session. I've decided to use futures for some of these illustrations because there's a better chance we're going to make trades. But something like this gold trade's already gone. Pretty good trade. Let's say I wanted to do this on your Great Britain pound, euro, or USD. Could I use a 5-minute chart? Yes, I could. This right here, if you're going to trade crossovers, something like this, you want to avoid things like that as much as you possibly can. You want to be in the market when you got a lot of volatility, a lot of volume, participation. We call that a nice deep market. A 5-minute chart you can see right here, Great Britain pound. Yeah, it's probably going to work pretty well. If, in fact, you were just going to use that regular EMA, 9 EMA, what I would recommend, if you wanted during the London session, the London-New York overlap, $30-minute chart, look at the volumes. Traded volumes are pretty good, at least consistent. This is the type of stuff that you want to avoid. I mean, look at when. I mean, if you're trying to trade this strategy, 3:30 p.m. my time, 5:30, right when those markets are dead, right around Forex rollover, you're more than likely going to get chopped to death. So if you're looking for this strategy, what did you really get? Did you get a chance right here? This right here would have been overbought if you're using the RSI as a filter. This means you would have been overbought right here. Did you get the sell right there? Where's your close? Close right there is 130.75. Where's the EMA at? Where's the EMA? 130.75.8. You don't do things like that. You don't do it. Your EMA right there is 130.75.8. What's your close? Your close is 130.75.8. You don't take that sell. Obvious. Things need to be obvious. It's not me just cherry picking this either. If you're right on the chalk, if you're trading Bollinger Bands or Fibonaccis or RSI or stochastics or 9 EMAs, and I mean it's right on the chalk. Like if you guys are tennis fans and the ball hits the chalk, or maybe you're a football fan and the receiver's dragging his toes just barely on the sidelines, I call that right on the chalk. And when you're on the chalk, anything can happen. It means it's too close. It's not a signal. I highly recommend staying off of the trades that are on the chalk. I really do. Here's another one. Right on that EMA, what's your close? 130.83. What's the EMA? 130.83.7. You can't do that stuff. If it's down to a fractional pip between your close and the EMA, don't do that. But right here, 30-minute chart on a Great Britain pound USD. There you go. Right there. Overbought. We're looking to sell the market. Sell it. 4-hour chart. Another great way to trade this thing. You could definitely look at a 4-hour. The problem you're going to have with a 4-hour is, especially if you're using RSI confirmation, is are you ever going to get in the market? Like right there, we're in oversold territory. We're going to want to buy the market. Did we even get a chance right there? Nope. Didn't get our close. Almost got it. Once again, right on the chalk. Avoid those. It's not clear enough. This stuff should be easy. You should be able to look at the chart and go, okay, I know what I want to do. So what would we be doing right here? Okay, we sort of briefly oversold. That would be a buy signal. Where would I be looking to buy? You could have bought right there. Then it becomes all about stop loss placement. If you put it beneath your price bar, you got stopped out. If you put it beneath the previous swing low, you're still very much alive and you're in the green. Well, you're close to the green. About break even. You're probably down a few pips. I like the 4-hour chart. What you want to do is you want to get in on something like that, where you get in on that big move. That's what these things are for. That's why there's always guys that trade moving averages. It's always about risk versus reward, 1 to 3, 1 to 4, 1 to 5s. Yeah, you're welcome, Jay. If it's on the chalk, ignore it. Don't do that. Give yourself some room. There's a lot of markets out there, guys. A lot of markets to trade. How about this one? Our YM is still simmering. Do we want to buy it still? I would say, yeah, if you get that bullish close, take it. All right, we got a couple other strategies to go to, and one that I really, really like and really am fond of. So let's go ahead. That was one that we put out on YouTube, so everybody's pretty much seen that. Now, some of the things that we have in the trading room are pretty, are they robust? I don't know if they're robust. I don't know if they're robust. They're price action strategies. They're adapted from Mario Singh. He wrote a book a while back. I think it's 17 profitable price action strategies. So we picked a few of these out and we went with them. Right here, you can see that there's 6 strategies out there. I think we've got, Bach the Talk's up there. So we've got about 6 strategies for you. Today we're going to focus on the Bollinger W. Now the Bollinger W is a nice little video we made. The W strategy incorporates the concept of choosing a double bottom. Check out the video. It's about 6 minutes long, learning resources. Click on there. You're going to get your PDFs. You're going to have a PDF there, PDF there, PDF there. It's going to show you the trade setups, what the rules are to the strategy, and also how to execute. And let's just roll through these real quick. This is a good picture of what we're talking about. Now, the Bollinger W strategy is a special kind of double bottom. Now, a lot of folks try to trade double bottoms. This is a special kind. We're looking for a big bearish move with the first low outside of the lower Bollinger Band. Then we get a pullback inside of our Bollinger Bands, and then a second low that's inside of the Bollinger Bands as well. Very simple. That's why it's a W. It's a double bottom. It's one of my favorite strategies. You go down, establish the first low, pull back, second low, bang. Okay. Now, time frame's important for you here. You can use it on any time frame. Just do some back testing first. I like the 30-minute time frame during the U.S. session, especially if I'm trading commodities or U.S. equities indices. That's big. 4-hour chart. I love 4-hour chart for Forex and spot gold, spot silver. Those things go 24 hours a day. You can trade it using that time frame. It was originally intended to be a day trading chart, meaning daily charts for stocks. That's what it was for. Now, you can see right here, our entry point's the most important part. I think everybody can follow the W, the idea of bearish move, bottom outside of the lower Bollinger Band, pull back inside, second low inside the band as well. Large bullish candle is a buy on the close. Now, I'm going to show you what a large bullish candle looks like because it is a bit subjective. Now, your stop loss, you can put it beneath the second low or the first low. Now, when I made this video, the idea was put it beneath the second low and let it go. There's nothing wrong with that. You can do it that way. It's just a little bit tighter. Personally, if it's not too big of a risk, I like to put it beneath the first low, the entire W. I think that's a pretty darn good way to do it. But in any case, right there, that's what your W looks like. And this is a good example of a successful trade. First low's outside, pull back, second low's inside, large bullish entry, and you can get that move. Essentially, we're trying to pick bottoms with this. Not an easy business. So, WTI crude oil futures, 30-minute chart right here. We've already taken the trade for you. We lined this up about 30 minutes ago. Nice bearish move. Now, remember, the settings on your Bollinger Bands, I believe, are the defaults, 20 SMA, close of 2. Nice big move. Lower bot right there, first low. Pullback, very clear pullback. Second low. A lot of people would say, Shane, why isn't that your second low? And I would say, well, what happens? You could say it's your second low, but you don't get an entry. There's no bullish candle. In my view, that sell-off is still valid. Why can I say that, though? That second low right there did not go outside of the lower Bollinger Band. Fails a few ticks in front of it. Lower Bollinger Band at that point is what? 69.90. What's my low right there? 69.92. At least with futures, I know that's 2 full cents above. That's good enough for me. That's not on the chalk. That's perfect. We're inside. We retrace a little bit. Negative price action takes over, and there we get our clean-cut second bottom right there. Now, entry. That's a big bullish candle. You say, Shane, the range of that's not big. I go, look at the body of that. That body is a big green candle. That's what I'm looking for. That was my entry. Bought right there on the close. Right now, we're sort of milling around. We were up pretty good earlier. This trade's just sort of, I wouldn't say stuck in the mud, but this probably would be your swing trade if you were looking for WTI crude. And if you don't get knocked out in the next hour, you probably have a pretty good chance to win it because you're locked in underneath today's low. probably during the overnight session, the Tokyo session, you'll start to see the buyback develop. You just can't really bet on that because you don't have an out. At least if you're trading this way, you do have an out. You stop yourself out beneath that first low. That's where I would put it. The low down there is 69.71. I'll be right there at 69.64, something like that, 7 ticks. One thing I don't want anybody to do, put it 1 tick beneath that low. You're going to get hit, and the market's going to reverse, and it's going to be painful. Give yourself a few ticks down there. Now, as far as our profit target, that's sort of open for interpretation. How do you want to, design the trade? If you want a swing trade, there's nothing wrong with really shooting for the middle of that chain. We pretty much know that hole is going to get filled at some point. The only question is sooner rather than later. I thought I heard a 72.50 somewhere in there. That's probably a legitimate target. That's probably what, a 1 to 2 or maybe a 2.5, maybe a 3. If you wanted to go 1 to 1, you certainly could. We bought 70.39, 69.64. That's going to be something like what? 26, that's 36.39, so 74 ticks. 74 ticks up above 39. You're going to be somewhere right in the 71.14 area. So you can shoot for 71.25 if you're a 1 to 1. If you want to stay in there for another $1, you probably could as well. I don't have a problem with either. I don't think that crude oil is going to stay complacent. I think you're going to see another big move. Geopolitics, politics, all of it. All of it's important right now. But that's a good look at a Bollinger W right there. We had another Bollinger W that I executed earlier. Once again, don't get carried away with the money there. That's demo dollars. Anybody can trade demo dollars. Okay, we're not sitting here going, oh, I'm up $700. No, the time will come to trade real money, and we'll do it. But, demo dollars, like I said. It's a W, though, and it's worked very well right there. Nice big sell-off, 30-minute U.S. dollar Japanese chart. First lows outside of the lower Bollinger Band. Pull back. Second low. You could say, Shane, well, that's the second low right there. I'd say, yeah, okay. Do you get an entry, though? That's not a big bullish candle. It's not. Look at how small the body is, the green body is compared to the red body. That's not an entry point. That's a doji. That's a hammer. This is another hammer. These are dojis. That's a pretty big bullish candle. Could I say that my second low's in? Why not? It's a clear spike low right there. I could definitely say that's a W. It's not outside of the bands. We haven't gone below the lower Bollinger. That one will play. That's way ahead. So is the entry perfect? Not really. We bought in right around here somewhere. But if you went on that candle, you'd be right there, and you'd still be ahead. So a little bit trickier one. You may want to back something like the U.S. dollar Japanese yen off to a 4-hour chart. Something like that. Start looking for bottoms. Can be done. Why, there's one right there. There's your first low. There's your pullback. It's a near miss. It's an almost, but a not quite. Something like that. So I like the Bollinger W. Go in the trading room. Check out the videos. Check out the tutorials. If you're interested in this strategy, I think it's a pretty good one. If you stick to it and you get good at spotting W's, pick a few bottoms. You can do very well. That's a fact. All right, guys. We had a couple questions. The first one's from, you'll have to forgive me on pronouncing your name, Mehdi. Meaty. All right, XBR, USD, Brent crude, 1 hour. Brent crude's a little bit different than WTI. Double bottom. Yeah, very, very similar. I mean, it's a good spot. Nice sell-off there. There would be your first low. There's your pullback. Second low. Problem is you're right on the. Now let's get over to our W. Remember yeah. Yeah, there it is. You'll notice it's pretty close to what we just looked at for U.S. oil and WTI. But right there would be your double bottom, and it's also qualified. We could qualify it as being a Bollinger as well. There's your low. There's your first low right there outside of the band. Pull back. You could say that's your second low, just like before, or right there. I would go right there. There's your entry. Stop loss beneath the pattern. Of course, that's a 30-minute chart. You want to look at it on the 1 hour time frame? All right, let's do it. And see, that's why a lot of this is all about time frame. As far as your 1 hour, is it a W? It's not a Bollinger W. It's definitely a double bottom. Definitely could say that. Inside the Bollinger Band, the idea being You're probably not going to get that big price elasticity, but maybe just trade sideways. Nothing wrong with that. Just be sure to stop yourself out beneath the double bottom. Good observation, though. I don't typically trade the 1 hour chart on anything. I'm just accustomed to trading 30-minute charts, especially during the U.S. session, and the reason why is volumes. Traded volumes are very important. Very, very important. Give us liquidity, tight spreads, nice moves. Matey, okay, thank you for the clarification. Hope that helps a little bit. Good spot on the double bottom, though. All right, Dre Day. What do you got? Green Bay Packers. I got football in the brain. All right, Great Britain pound Kiwi. If you're looking for a swing trade, we're definitely going to be backing off of this one. Let's go ahead and just back this thing up to probably a weekly chart and have a look. Well, for me, you know, you're not definitely, but you're probably going to want to be bullish here. Spike low, spike high, pull back, something like that. 213.70, that would be my bullish anchor point. If you could have got that long, great. If you missed it, that's okay too. Still in bullish territory, though. I would be bullish over that level. As soon as we fall beneath that, I would be bearish. Let's go to a daily, see if we can get a long entry. Yeah, I mean, there it is. That's almost perfect trade location. Spike low there, spike high. Those are our weekly levels. We pull back on the daily. We hit our support zone perfectly, and now we're rocking and rolling north. Pretty much we missed in the way that I trade, I missed the buy. I would go look for something else, but I would definitely be bullish here. As far as can we get a secondary entry on a 4 hour? Not really. Not really. I think we missed it, at least for the way I trade. I think we missed it. So definitely. All right, we wanted to look at gold as well. And then we'll go ahead and sign off here for a few hours. Let's see. Did we ever get our close, our bullish close? Yeah, there it is right there. All right, let's sell it. Let's send it. Okay, so if I'm long 4, I'm going to be looking to stop myself out underneath that swing low on this 9 EMA. Why am I long? Confirmation down there. Okay. Oversold territory again. I'm looking for a bullish close. You're long from right there, and you're starting to really see this thing bear a little bit of fruit. Stop loss is there. If, in fact, you want to design a profit target and use smart money concepts or maybe an order block, you can use your profit target right up there towards the top of that bearish market structure, somewhere up in there. It's doable. It's a trend trade. Or you could look at something like this, maybe this pullback area right there in a 1-to-1 risk. Right now the trade's up a few ticks, so we'll go ahead and let this thing develop here. All right, we had. I want to look at gold before we signed off. I think it's important. We typically check in with gold each and every day, and why? Well, because everybody trades gold. At least everybody here trades gold. All right, 2603, fantastic area, fantastic, nice pullback break. What do you got right there? All-time high. If I'm trading spot gold, I have that number in my head, all-time high, 2685, somewhere in that area. Huge, huge, huge area. We're very bullish, though. We bounced off of 26. We're headed north. 2750 more than likely is going to be what I would, if I was swing trading this thing and interested in taking maybe an investment play a couple weeks ago on that pullback, or maybe even down here we were calling for it. I think once we broke up over 2500, it was a matter of time before we got to 2750. I don't see anything that leads me to believe that's not going to happen. I don't want to be a seller in this market until we test that area. I think that's the big one. All right, everybody. I'm going to go ahead and sign off for now. We sort of ran a little bit long there. We can check back in on our trade. Yeah, we're getting a little bit of price action there. Not too bad. You know, it's right now it's a winner, up a few bucks. Absolutely nothing wrong with that. So that's how you sort of trade some of these things. Strategy is a big part of your trading. Always will be. Discipline's a bigger part. Risk versus reward, money management's the name of the game. So if you get good at money management and you get good at being disciplined, you're going to be a profitable trader. I don't care which one of these strategies work or you use. You can trade all of them. They all work. There is no holy grail. The question is after you lose 3 or 4 W's in a row, are you going to take the fifth one and stick to your risk versus reward and have that discipline? Are you going to wait around for a week or 2 weeks to find a 9 EMA strategy that you like on a 4-hour chart and then execute it? That's what makes trading hard. The waiting's the hardest part. That's for sure. All right, everybody. We put a trade idea out on the Kiwi the other day, so just feel free to jump in our trading room, take a look at it. I love a sell. I got a sell on the board for the Kiwi. We're just waiting for a little bit of a retracement from current levels. All right, everybody. Until next time, trade the action well, and we'll talk soon. See you.